Good morning, everyone. It is Thursday, August 11th. It is great to see you in here this morning. Let's take a look at our futures chart, and you can see that we are continuing on. Yesterday, the big worry was CPI data. Was it going to show a lighter inflation? If you go back and watch a couple of my past videos, you can see that I was sort of, you just kind of common sense looking at that it appeared as though those inflation numbers would start to cool. And I base that off of, well, my shopping. You know, how much does milk cost? How much does gas cost? If I go into Lowe's or Home Depot, what are some of those building material costs? And those have started to come back down a little bit. So it made sense that the CPI data would start to cool off. Today we have producer price index, kind of our last big piece. So the next question is, now what? Yeah, I don't know. No. Okay, so I can just tell you how I perceive things to be moving. One thing that was a big talk yesterday, we had several Fed speakers out. We're going to have a ton of those out over the next month, trying to say, well, we're going to do this. Well, I see it this way. Okay, so here's the thing. Turn all that off. Just don't pay attention to it, and I'm going to tell you why. We're going to have 2 more CPI monthly reads before the Fed does anything. One more, because they don't meet in August. So their next meeting is at the end of September. So I don't think this sounds terrible. I mean, it matters what this data says, right? Because it kind of tells us where we are. But it doesn't matter as much to the Fed, who then won't meet until next month. And I'm not saying the Fed isn't doing anything or not paying attention, but next month numbers could throw all of our analysis from this month out the window. So fool's errand, spend your time paying attention to what's right in front of you. And here's the other thing. How many people are comparing everything that's going on right now to something that's happened in the past? Now, we have to learn from our past. Absolutely. We need to watch for those indicators. There's a reason that we look for things like 2 negative GDP quarters to point to a recession, even though that is not the technical term. Please go to the neighbor and don't send me a nasty email telling me that I'm wrong on that, because then I will just send you back an email with the link to how recession is actually calculated, and that it's the neighbor who does it and they don't use GDP. Okay, let's move on from that. So, yeah, I know that was a little snarky. I'm sorry. I have only had a quarter of a cup of my coffee. Okay, so all of that being taken into account, there are areas, to me, and this is just my opinion, recessions don't have to be broad-based. There are areas that become recessionary for different reasons. The problem is when those areas become so overwhelming that they take the rest of the market with it. I can point to the housing bubble. And that was something, first of all, we should have seen it coming. I was in the housing market. We were selling our second home at that point. And I'll tell you what, it just seemed too good to be true. So we sold. And it was, you kind of feel bad because then everything collapsed. That was a system, we shot ourselves in the foot on that one. That's really what it is. We were funding these loans and putting this debt out there for people who couldn't afford it, and then with any sort of inflation or price increase or market downturn or geopolitical, right, then all of a sudden they can't pay for it, and it takes the rest of the market down. So we can see these indicators in charts. If we look back 20 years, 30 years, right, 40 years, we can look back and say, well, we were in this spot before, we were in this spot before. Yeah, okay, so our chart might be in that spot, but what about everything else? Okay, you can fill in a blank right there. See, here's the thing. It's not exactly the same. So we are going to have another monthly job report, right? And here's my forecast, okay? It's not going to be hot. It's not going to be as big as this last one. You want to know why? Because the numbers just aren't out there. So it's going to look like, oh my God, we have this cooling labor market. Well, because we have all of these jobs open and they're not being filled. We have more jobs open than we do bodies to put in the job. So if anybody, you just had to take a ticket and that was your job, we would still have more jobs open than we do people looking for those jobs. people should be picky about what they want to do. I understand. I'm not trying to dog on anybody for that. But I'm telling you that right now our labor market, although the jobs filled, the jobs created, is going to have to cool off because it is a numbers game. That's all it is. And it makes sense. So then we'll start ramping up a little bit because we'll have seasonal hires coming up. Can you believe it? We're talking about seasonal for Christmas already. Oh my gosh. So we're going to have those things. We have natural cyclical things that are happening underneath the market that they're cyclical. So they constantly happen. We have hiring at certain times of the year, taking the last 2 years out, right, because of the COVID chaos. But for the most part, we have these things that constantly happen underneath our market. And our market is not in this very terrible, unstable spot. Now, there are a few things that we should be worried about. And these are going to be some geopolitical things, right? We still have an ongoing, lingering, painful war going on between Ukraine and Russia. That affects a lot of our agricultural products. I think that will lend to energy prices going back up. Maybe not just at the gas station, but I'm talking about that electric bill, that heating bill, things like that. And if you watch yesterday's video, it goes through the pipeline issues with natural gas and oil coming out of Russia. So go take a listen to that. I don't need to go over that every single day. But those are things that are coming up and we can see this. So, okay, all that being said, use common sense. You can spend hours and hours and hours and hours watching other people's analysis on what's going on in the market. I'm going to tell you, and for me too, right? Go look at a chart. That's what you need to do because the price action will tell you what's going on. Markets are forward looking. They aren't late to the game. They are the game. They are the game. So keep that in mind and, stop trying to end run and try and outsmart the market and get to where it's going before it gets there. Just go with it. Why work so hard for an uncertain outcome? Okay, all that being said, yesterday we had a very nice rally up off of those numbers. But what I really like about yesterday's move, we have a gap. Well, I don't like that. Okay, we all know I do not like gaps. But I like this. We came in, we had the gap up, we took some profits out early, right? And then all day, very quiet, we consolidated. That is a very steady. We didn't have this big whip up, down, up, down. Nope. This was telling me we are not fearful. The markets are not fearful. Here's the VIX. This is the volatility index, the fear index. And look at this. We melted. Even when those profits were being taken early in the morning, if you saw the SPY compared to this, look at this. There was no fear, right? We came back up and tested some areas, but for the most part, we had no fear. And we're seeing that this morning on continuation. We also had some great numbers in Disney. They came out with a beat. So look to the other streaming services, whether it's Paramount or Comcast, Netflix, of course. Look at those for some sympathy to move along with it. But I'll tell you, this was a beautiful move. Apple, look at this, ran right into the close. I actually took my profits out, not because I didn't think we weren't going to have good, or not because I didn't believe we were not going to have, I hate double negatives. I believe that we were going to have some continuation today, but booking those profits in such an uncertain market when we know we're getting more data out like the PPI index, why not go ahead and book those profits? It was a good day. So we'll come right back in, let it set up, and then see where it wants to go from here. But we're seeing a lot of beautiful moves in charts where they just kind of kept grinding higher. This one actually kind of out of the blue. I talked about it very early in the morning. I think I even talked about it pre-market. But to come take a look at Roblox, it got smucked, and then it came in and just charged up, grinded up all day. And I said to watch for a reversal into the previous day's action. And it did just that, closed beautifully, and it's continuing on here this morning. So that was a nice bullish look with a lot of volume coming into it post-earnings. Okay, so let's hop into some that I'm watching for today. And I was watching AMD yesterday. Look at another chart. So the semis as a sector really just didn't participate as much as the rest of the market. But look at this beautiful long tail. This is a nice hammer. Looking forward, we smacked a fib line like this for some continuation. I'm looking at the 916-100 calls at an entry around 99.35, which does look like it's going to be above that area. So use an opening range break. Either a 5, 15, 30-minute, whichever tickles your fancy. Close it if it looks to close below the 8 EMA. I'm targeting 102.44 and 104.59 initially here. AMD can really, really move. It's very liquid and pretty affordable. Square or block, sorry, it'll always be square to me, but apparently it's really block. Look at this, nice move up. That is a beautiful, yesterday we had a confirmation of a bull flag, looking for it to continue on here today. Square 90 calls, entry above 89.03, stop at 87.20. Looking for a target of 93.19, which I know is pretty close. And then looking on to 103.13. I know that's a pretty big gap in there, but that's the area that I'm looking at in here for a move. Again, if it's above that entry going into the morning on any of these, you can always use an opening range break. Now, Boeing. Wow, this thing has finally come back. I'm not sure if I don't think there could be any more bad news in Boeing. Of course, as soon as I say that, they'll do something stupid. But look at this. We've been talking about it a lot in the room. I like this kind of choppy action, just consolidating really nicely here. Now using this fib line that was resistance as some pretty decent support. Look for a continuation. They've had some good news out lately. Looking at the Boeing, the BA 170 call. I want that at 171.14 for an entry. I'm going to stop at 167.25. Looking for an entry, or looking for a target at 171.76 and 179. Now, again, opening range break if it's above that. Of course, for bullish action, kind of throw a dart, almost anything. Apple, Amazon, Google, Microsoft, Chewy, already talked about Roblox, Snow. All of these look really great here this morning. We are also seeing energy take a nice little leg back up here, so look for some plays. Buffett has poured into Oxy, so that's a pretty liquid one right here, so take a look at Oxy. But in general, you can look at the XLE, and with rate hikes, now all the talk, there is quite a bit of activity in the financial sector. So it's all speculation until the end of September, but a lot of headlines move these stocks, so take a look at them. If you have any questions, Heather C at GivingTreeTrading.com. I look forward to seeing you.